Well, hey guys, welcome back. Happy January. I hope you guys had some amazing holiday months. I know I was crazy busy. Apparently, real estate does not stop during the holidays. So it has been a minute. It has been a minute since I've seen you. So I want to say thank you for all my new subscribers that have come and watched some of my older videos. I have got some good content coming up for you guys on this channel. So yeah, keep subscribing. There's my little button there. If you don't know who I am, my name's Maegann Yarbrough. I'm a realtor in the Phoenix, Arizona area with eXp Realty, and you are visiting my monthly market update that I do. And what we're going to do is go over some of the sales that have happened in December and talk about some trends that are in the real estate market. But I have so much content coming out for you guys here, but wanted to get this video out and just get January started. So we are back in business with the AZ Real Estate Geek channel. These numbers come from the Arizona Regional Multiple Listing Service that realtors subscribe to. It collects all the data from the Phoenix metro area. So this is kind of what I base all our numbers on. So we are nice and consistent month after month. In the month of December, we sold 9,299 homes, which isn't too bad for December. December is usually a time of lower sales, although the price points tend to go up in December because there is lower inventory. But that is up from November, which we saw 8,957 sales in November. The median sales price is also up. In December, our median sales price for homes was $425,000. Comparing that to November's $420,000 median sales price. This has been a big jump over the last couple of years. In 2021 alone, we saw almost a 30% growth in the median sales price. It's kind of crazy. There are pros and there are cons to that, and we'll talk about that in a little bit, but that's where we're at right now. The average sales price is a little over $530,000. Compare that to November's average sales price, which was a little over $513,000. As I said, in December, our new listings that came on the market were a little low. We had 6,990 new listings in December. Compare that to the 8,759 new listings that came on the market in November. And compare that to December of 2020, where we had over 10,000 new listings in December. So although new listings in December are on par for the course year after year, we are still down year over year from 2020. Inventory still is very low, almost in every price point. This December, I was helping a few buyers in every single price point you can think of, and it was a little tough to find things on the market in December. We had 9,501 active listings in December. Compare that to the 10,053 listings we had in November. So active listings, this is listings that were in the active status toward the end of December. So that means they were not under contract yet. But we still are putting homes under contract. So in December, we had 5,449 homes go pending, which means they went under contract in December. But that is a big drop off from the 8,348 homes that went pending in November. And we can compare that also year over year. In December of 2020, we had 7,100 homes pending in December in 2020. So we are still a little down under contract, but again, that's just the lack of inventory, not the lack of people wanting to buy homes. Our average days on market is starting to tick up a little bit. In December, our average days on market was 34 days, and that is up from November, which had 32 days. And comparing that year over year to December of 2020, which was 31 days. So the average days on market is how many days a house stays on the market before it goes under contract. The smaller this number is means that the home goes under contract really quickly, which we were seeing extremely low days on market in the summertime when things were going crazy. Things were going under contract within 24 hours, but that number's starting to creep up a little bit. That usually means either the homes are being adjusted for the price points that people were paying. Some sellers start raising up the prices of their home, thinking that they're going to get top dollar. But since the market is kind of cooling down a little bit, those price points aren't sustainable. So now the homes are staying on the market a little bit longer. Buyers are starting to say, you know what, it's just not worth it. And as I was saying, our inventory is still fairly low. We have 1.03 months of inventory available, and that is a tick down from a 1.08 months of inventory that we had in November, and slightly lower than the 1.05 months of inventory we had of December 2020. So monthly amounts of inventory is how much inventory is out there. A normal average market, you want to see about 6 months of inventory. So that means all those new listings that are coming on the market, if nothing else comes on the market, we would be sold out of all the homes in 6 months. So that would be a normal market. Right now, and for the past year or so, we've been hovering around the 1 month marker, which means if no more homes came on the market, we would be out of homes completely in the whole entire Phoenix metro area in a month. That's insane. So it is still a very strong seller's market. Going back to those prices, although the prices are still high, they are not as overinflated as some people might think. We are now seeing a dip in our sold to list ratio percentage. So a few months ago, I was showing that our sold to list ratio was hovering at 103% up to 105%. And what that meant was the price point that the seller is listing their home for, the actual sales price is going higher than that. So it's 103% of what that list price was. We're now at a sold to list ratio of 99.5%, which means that the homes are being listed at a certain price point, but they're being sold at slightly less than the list price. And that's where the market is very slowly starting to correct itself on these price points. According to the ARMLS rent check, the median lease on the Phoenix Metro rentals that were available on the MLS was $2,095. That's a tiny tick down from November, which was $2,100. But less people are renting in December or getting into new leases about that time. So probably the rent kind of dropped down a bit. The average lease was $2,262, which also ticked down a little bit from November, where the average lease was $2,308. And let me talk a little bit about rentals right now. I know I probably talk about them here and there, but I want to go down. I've been speaking to many people who are renting right now, and they are talking about that they're renewing their lease and they're seeing a $200 to $300 a month increase on the same property they've been in for years. And it's crazy. The rent prices are going up like insane. And the problem is, this is the market value. Investors are buying these homes and apartments for a base value, and because the value of the homes are going up, they are turning around and renting out these properties to match the market value of what they are paying on their mortgage. It is rough. I feel it. I feel it for you guys that are renting right now and seeing those prices go up and up and up and not seeing any change in the property that you're living in. So I feel for you guys. I really do. As of January 4th, 2022, on Mortgage Daily News, interest rates are at 3.29% for a 30-year fixed mortgage. That is the highest rate that we have seen in 9 months. Analysts say that that's not completely unusual at this moment because a lot of the mortgage rates are based off bond trading, and some of the bond markets were closed over the holidays. So as soon as the bond markets reopened, people reinvested and those rates went up a little bit. That's how that works. But analysts are expecting mortgage rates to go up this year. Lawrence Yun, who is the National Association of Realtors chief economist, is predicting rates to go up to at least 3.7% by the end of the year. And some analysts are saying it might climb to 4% this year. So those of you guys who are still renting and still thinking about buying or waiting for a bubble to pop or waiting for anything, I'm going to stress, please, please, please check with a loan officer right away and try to get these low interest rates before they go up again. Although home prices are higher, they're not going to do any sort of deep dive, price-wise at least. They're stabilizing now, but the interest rates are going to go up. We have had historically low interest rates for a few years now, and they are going to go up. So if you are thinking about buying a home, you want to do it while the interest rates are low, because overall it will cost you less in the long run than if you wait another year or two and those interest rates are higher. By then the home prices will still be going up as well, hopefully just at a more normal level of 3 to 5%. One example Lawrence Yun put out was inflation. So we are dealing with some massive inflation right now due to supply chain issues and inventory shortages. All those things are increasing inflation. The pandemic's causing a big part of that. We understand that. So a lot of people, especially investors, are trying to hedge their bets against inflation, and a lot of them are putting money into things like cryptocurrency. But Lawrence Yun did want to point out that real estate investing is still one of your best bets to beat inflation. So one example was in the 1970s, we had an inflation high of 7.1%, but home prices still increased 9.9% overall on the same pace. So if you are investing in real estate and hold, then it should outpace inflation over time. It is a long bet, but it does work over time. But to give you an example, just a weird example, and this has happened to a few of my clients, but just off the top of my head, I was working with a client who was selling a condo that they bought 2 years ago. 2 years ago, it was still a seller's market, and they still had a hard time getting into a home. It was still a little more expensive than they really wanted to spend at the time 2 years ago, where people were still waiting for the bubble to pop. They sold their condo 2 years later for $80,000 more than they bought it for. So the investment that they made on that condo still outpaced the inflation that we are experiencing right now in 2 years. Now I'm going to say that's not usual. We've seen incredible climbs in homes in just the past couple of years, but think about if you had bought that home 2 years ago that you were thinking about buying, but decided to wait until the bubble burst. There's not going to be a big bubble that's bursting anytime soon. So you want to try to build that equity, even if it's in a small amount right now. Anyway, that's what chief economist of NAR, Lawrence Yun, is saying. I'm just backing him up because, I want to help you guys. So here's a few little home trends we are seeing. If you guys are the HGTV type and you're watching some of these things, it used to be when I was watching HGTV, I was watching like Property Brothers or whatever, everybody wanted an open concept. They were busting down walls to get an open concept, and builders started building homes with an open concept. But now, since the pandemic, we're seeing lots and lots of more utility spaces that can be doubled as a den or a home office or just space for the kids to have their own places. And that open concept is closing off a little more. One thing that hasn't changed though is the kitchen. Everybody still congregates in the kitchen, and kitchen remodels are on the rise. And although the white cabinets, white countertops, white subway tile are still trending a little bit, it's starting to move away from that into more natural and warm colors. Greens are becoming popular. It's supposed to replicate the forest bathing trend of being out in nature and having some tranquility of that. Natural woods are coming back in cabinets, and a mix and match of the natural woods to have a more warm, natural feel to the kitchen. Escape in your kitchen is trending right now. Also, what's trending are metallic accents. So we are going back to gold, copper, brass, silver trim in some of our accent colors now. I mean, seriously, I can't believe brass is coming back. Can you? But these metallic trims are supposed to be reflective of a European Renaissance look. The minimalist look that people were really going bonkers for the last couple of years is kind of on the flip, and we are seeing a lot more of the maximalist look of new accent pillows and colors and appliances. Speaking of appliances, steam ovens are the new trendy appliance right now. I didn't even know what a steam oven is. But apparently it is a way to steam your foods in a healthy way to maintain and retain the vitamin levels in the food. So if you've ever used a steam oven, let me know about that, because this is new for me. Anyway, thank you for sticking around and listening to my little update. Let me know what kind of things you want to know about in the Phoenix real estate market. I definitely want to make this content that is interesting and exciting and help you point in the right direction on if you live in the Phoenix area and you want to know the value of your home versus if you're going to be moving to Phoenix and just want to know what the median house price is compared to some other places in the country. But thanks again for watching. Remember to subscribe, and I will see you next time. Until then, stay geeky, my friends.